This is pre-market pulse powered by Zintch. A fast, clean read on the tone of the market before the opening bell. No hype, no noise, just the signals that matter. Here's how the market is setting up this morning.
Good morning, cobbers, and welcome to the Zintch.com pre-market pulse for Monday, April 27, 2026. The numbers at 6:40 a.m. Eastern Time. Futures are nearly flat as the market digests a major weekend development. Iran has offered to reopen the Strait of Hormuz. Dow Futures, YM. 49,325. Down 67 points, down 0.14%. Nasdaq Futures, NQ. 27,475.50. Up 40.50, up 0.15%. S&P 500 Futures, S. 7,193.25. Down 1.50, down 0.02%. The split tells the story. Tech is green on semiconductor momentum. The Dow is red on oil-sensitive industrials. The S&P is essentially unchanged. The market is waiting. Friday's close. The S&P 500 closed at 7,165.08, plus 0.79%, a fresh all-time high. The Nasdaq also closed at a record. The Dow dipped 79 points, minus 0.16%, as the broader market rotated into tech. Both the S&P and Nasdaq notched their fourth consecutive weekly gain. The big story: Iran's proposal. Over the weekend, Iran, through Pakistani mediators, presented the United States with a new proposal to reopen the Strait of Hormuz and end the war. The key terms, according to Axios and Bloomberg: Iran would reopen the Strait of Hormuz to commercial shipping. Both sides would agree to a ceasefire. Nuclear negotiations would be postponed. Not abandoned, but delayed. This is a significant shift. As recently as Saturday, Iran's foreign ministry declared the strait would, under no circumstances, return to its previous state. 24 hours later, a formal proposal landed on Washington's desk. The market's reaction has been measured. Futures didn't spike. Oil didn't collapse. The read is cautious optimism. The proposal exists, but no one has accepted anything yet. Oil, still elevated, but the ceiling may be forming. Despite the peace proposal, oil is still climbing this morning. Brent crude, $108.36, up about 2.9%, its highest level in 3 weeks. WTI, $96.55, up about 2.3%. Goldman Sachs raised its Q4 2026 Brent forecast to $90 from $80 on Sunday, citing extreme inventory draws from the Hormuz closure. The bank also lifted WTI to $83 from $75. The takeaway: even if the strait reopens tomorrow, the supply damage is already done. Inventories have been drawing down for weeks, and it will take time to rebuild. Oil may have a floor in the $85 to $90 range for the rest of the year regardless of diplomacy. Gold and the dollar. Gold, $4,694, down about 0.3%. Gold lost 2.5% last week, snapping a 4-week winning streak. The strong dollar and rising treasury yields are making non-yielding gold less attractive, even with geopolitical risk elevated. Dollar index, DXY, approximately 98.51, firmer on safe haven flows and rising rate expectations. 10-year treasury yield, up over 2% on the week. The bond market is pricing out near-term rate cuts as oil-driven inflation keeps the Fed on hold. Asia overnight. Nikkei hits another record. Asia had a strong session. Nikkei 225. Surged 1.4% to 60,537, touching a new intraday high of 60,903. The semiconductor rally continues. Tokyo Electron and Advantest led the charge on Intel's Friday blowout. Kospi, South Korea, jumped 2% to 6,615 as Samsung and SK Hynix rode the chip wave. Hang Seng, up 0.2% to 26,016. Modest gains as the Iran proposal provided some relief. Shanghai Composite, up 0.1% to 4,090. China's industrial profits grew at their quickest pace recently, providing a floor. ASX 200, down slightly. Australia is caught between the positive Wall Street close and the oil shock. Europe, mixed at the open. European markets opened mixed. Stoxx 600, down slightly as investors weigh the Iran proposal against still elevated oil prices. FTSE 100 and CAC 40 futures were down 0.8% before the open. The Eurozone is feeling the oil pain more acutely than the United States. Last week's flash PMI at 48.6 confirmed manufacturing contraction, and $108 Brent is a direct headwind for energy importing economies. The week ahead, the biggest calendar of 2026. This is not a normal week. This is the most consequential 5-day stretch of the year. Monday, Domino's earnings before the bell. No major economic data. Tuesday, BOJ rate decision. Expected to hold at 0.75%. The quarterly outlook report could signal future tightening. Wednesday, the Fed rate decision. Q1 GDP advance estimate. And after the bell, Microsoft, Meta, Amazon, and Alphabet all report. Wall Street is calling it Super Bowl Wednesday. Thursday, PCE inflation data, the Fed's preferred gauge. Apple earnings after the bell. Plus Alibaba, Accenture before the open. Friday, 160 S&P 500 companies will have reported by week's end. The convergence is extraordinary. 2 central banks, the most important inflation reading, the GDP print, and 5 of the 7 largest companies on Earth. All in 120 hours. The read, futures are flat because the market is holding its breath. Iran's proposal is real but unaccepted. Oil is still above $108 but may have found a ceiling if diplomacy gains traction. Records were set on Friday and Asia extended them overnight. But the real test starts Tuesday and doesn't stop until Friday. The tone this morning is not fear. It's not euphoria. It's concentration. The biggest week of the year begins in 3 hours. That's your Zintch.com pre-market pulse for Monday, April 27, 2026. Good luck, and goodbye.